Hi everyone and welcome back to the channel. We receive a lot of questions about superficial losses, so today we're going to run through a few examples of stock transactions to show you how superficial losses work. If you're not familiar with what a superficial loss is, I would strongly suggest starting off with our first video, which I'll link in the description below, and then come back to this one. Essentially though, depending on when you buy and sell your stocks, you may not be able to claim your capital losses on your taxes. According to CRA, a capital loss is deemed a superficial loss instead when two things happen. You or an affiliated person either buys or has the right to buy the same or identical stock within 30 days before or after you sell it, and the second is that you still own that stock 30 days after the sale. Now, to most of us, this explanation leaves us with a lot of questions, so let's just get right into a few examples. You own 100 shares of AAA stock worth $10 a share. The market goes down and your shares are now only worth $8 each. You want to limit your loss, so you decide to sell your entire position in June, which means you now have a capital loss that you can deduct on your taxes. 2 weeks later, though, the market starts to go back up again and you decide you want to jump back in and you purchase 100 shares in that company again. Is the $200 loss still a capital loss, or is it a superficial loss? In this case, it's a superficial loss. You purchased and owned shares that were identical within 30 days of selling them. You cannot claim the capital loss on your taxes this year. You need to update your adjusted cost base on your new shares instead. So as you can see here, the ACB for the stock is now higher, which means when you eventually sell it, it will either increase your capital loss or help to decrease your capital gains, since you'll record your cost as $1,100 for that purchase instead of the $900 that you paid. I don't want to bombard you with too much information today, so I'm not going to go into detail about the adjusted cost base in every single transaction. If you want to learn more about that, I'll include links in the description below. Let's say instead in this example, you don't repurchase those shares. Instead, you use the money for something else. But your spouse really wants to invest in AAA, so they buy 100 shares of the company. If they buy the stock in an account that's in their name only, can you still then claim that $200 capital loss on your taxes this year since you don't own the shares? In this case, the answer again is no, because the same stock was purchased within 30 days by someone CRA considers an affiliated person. The loss is still a superficial loss even though you don't own those shares. You've lost the ability to claim the capital loss on your taxes, and your spouse now has to update the adjusted cost base of the shares that they just purchased. If you're tax savvy though, this can sometimes be used to your advantage. If you think you know how, let everyone know in the comments section below. Next up, we'll see what happens when you buy or transfer investments into your RSP or your tax-free savings account. You own 100 shares of ABC stock worth $10 a share on December 15th. On December 20th, the shares are now only worth $5. You decide to sell the shares before the end of the year so you can lock in that capital loss for the tax year. You then decide to purchase them again on January 1st in your RSP account so you can also get the tax deduction. Since you waited until the following year, can you claim that capital loss? In this case, the answer is unfortunately no. The sale will be deemed a superficial loss because you repurchased that stock less than 30 days after you sold it. That 30-day window applies even if it occurs the following tax year. You'll be able to claim that deduction on your taxes for the RSP deposit, but it's the new stock within the RSP that would get their adjusted cost base updated. Since you can't claim capital losses that occur within your RSP though for tax purposes, you lose that capital loss forever. It also applies to in-kind transfers from a non-registered account into things like your RSP and tax-free savings account. In this example, you buy 100 shares of XYZ company for $10 a share in April. Bad news comes out about the company and the stock price starts to drop. You don't want to lose too much money, so again, you sell your entire position. It's not until later in the year when the company turns things around again and the stock price starts to rise. You decide at that point to jump back in and purchase 100 shares in the same company. Since you bought and sold shares within the 30-day window in April, is the loss a superficial loss? In this case, the answer is no. This is not a superficial loss. Remember, two conditions need to be met for the April sale to be a superficial loss. First, you need to buy shares 30 days before or after selling them, which in this case you did. but the second condition is that you're still holding those shares within 30 days after the sale. In this example, you liquidated your entire position and didn't repurchase any shares until November, well after that 30-day window. The $300 April loss is a capital loss. In this example, you own 100 shares of 007 stock worth $10 a share. The price drops to $8, so you sell half of your position to limit your losses. 2 weeks later, though, the price starts to go back up again, so you decide to buy back in, but you only purchased 25 shares this time, not the full 50 that you sold. Is this a superficial loss if you don't buy back the full amount that you liquidated? Yes, for part of it. You'll be able to claim a capital loss for the 25 shares you sold and didn't end up repurchasing. The remaining capital loss, though, can't be claimed since you bought back those 25 shares within 30 days. Instead, it'll be added to the adjusted cost base of the 75 shares you now own. Hopefully this helps answer most of your questions surrounding superficial losses. Thanks for watching, and we'll see you next time.